Thanks everyone for joining this session and good evening. I hope you all had the great Suhabin and Tahui lah. Okay. So thanks for joining this evening webinar, this seminar. And to the online audience, do you have any questions? You can drop us a question in the chat box itself. So let me introduce myself. So I'm Chen Kai from PhillipCapital channel, and the speaker for today plus Huan Zi from Phillip Investor Center. So we'll be talking more about unlocking the potential for money market funds, a strategy for cash management. Okay, so before we dive into that, right, maybe we'll talk more about this exciting promotion that we are currently running. So let me just run through with you quickly. So the promotion that we are running until the end of this month is where we will celebrate National Day with 5.8% per annum guaranteed returns. Okay, it's guaranteed returns. You hear that correctly. So this is the banner. Okay, I reiterate again. It celebrate with 5.8% per annum guaranteed returns. Okay, so just to quickly run through the key points of the 5.8% per annum campaign of how it works. Okay, this promotion will run from 1st to 31st of August. Okay, both dates inclusive. Okay, and this promotion to open to all clients, staff, and reps. So of course, I believe those that are in the audience, right, are existing POEMS account holder or UT advisory account holder. Okay, so the eligible account holder is eligible for this promotion is individual accounts only. Okay, not eligible for joint accounts. Mainly for individual cash plus account, cash management account, prepaid custodian margin accounts, and even UT advisory rep account. Okay, so the mechanic is that you can fund your account with a minimum $1,000 SGD, okay, capped at $50,000 to enjoy a 30-day return of 5.8% per annum guaranteed returns. Okay, so of course, do take note that the deposit has to be fresh funds, which means we have to transfer money from the bank to POEMS account to be eligible for these 5.8% guaranteed returns. Okay, this promotion again is eligible to individual accounts only. Okay, cash fund source and SGD currency deposits. So a lot of plans that we are running right now, because we are halfway through into the promotion through the month. A lot of clients ask us, how is the 5.8% being calculated? Okay, just to give a quick scenario. Okay, let's say for customer A, they funded $50,000 and held this $15,000 over a period of 30 days. Okay, how much the client will get is $3,000 times the 5.8% divided by 365 times the 1 month period. The client can get up to $238.36. Sorry, $238.36. Okay, so this is inclusive of the Phillip Money Market Fund actual returns, and we will talk about the difference accordingly. Okay, so this is the promotion. Of course, let's say some client, right, they actually have multiple POEMS trading account. Are they eligible for this promotion now? Answer is no. Currently, do take note that each customer is only eligible to one bonus reward for one of the accounts. So let's say if this account holder, for example, myself, I have multiple POEMS trading account, I only entitled to one reward. Okay, so when does the 30-day period start? It will start when you first fund your account, your POEMS trading account with $1,000 or more, to any of your accounts, your POEMS trading account or your UT advisory account during this month of August. Okay, so do take note for this promotion. Okay, so of course, I'm not going to run through all of it, but however, to highlight the main point, okay, so we will take that only the net balance of new deposit at the end of each day in the 30-day period will be calculated for the guaranteed 5.8% per annum returns. Basically, it's trying to say that when you top up cash into your POEMS account, okay, let's say if you want to participate in this promotion, you can still accordingly, you can trade, you can withdraw accordingly. However, to maximize your returns, to earn more, of course, we encourage you to put cash in the POEMS account, earn the MMF returns, earn these 5.8% guaranteed returns. Okay, so of course, to highlight any withdrawal or settlement using the deposit funds during the 30-day period will be excluded for the calculations. Okay, so do take note that all fresh funds have deposited by 31st of August to be eligible for this promotion. Okay, so let's say if you are an existing POEMS account holder, okay, you want to participate in this promotion, how to participate? Easily, what you can do, you can opt in to Smart Park. Or let's say if you have already opt in, how to fund the account, right? Is you can use PayNow and do fast transfer, as highlighted over here, the PayNow QR code. Or you can pay now to UEN number and the reference code, you can put in your POEMS account number. Or let's say if you want a better way, you can go to your P3 mobile app and go under Me Tab and deposit fund accordingly. Okay, so how to open the account? Okay, let's say if you are not really an existing account holder, not to worry. You can open the account through our website, premiums.com.sg, and click on open an account and opt in to this Access Funds Management Facility Smart Park. Okay. Okay, so this is the promotion for the current promotion we're running until the end of this month. Repeat again, is earn guaranteed returns of 5.8% till the end of this month, 31st of August. Okay, so do take note. So right now I'll hand my time to Hansi to talk about the topic itself.
All right, yeah. Good evening, everyone. So I hope you all are enjoying your evening so far. So, yeah. Okay, so I think the topic today is how you can use money market funds or use money techniques to actually get more out of your funds that you have. All right, so I think all of you all that are here are POEMS clients, or you might be POEMS clients soon, and you are interested in investing. Right, so investing itself is a way of how you manage your funds. Right, so one important aspect that many people don't really look after is how they manage their idle funds. Funds that is for emergency use, funds that is set aside for short-term use, or left in the bank account. All right, so basically how Smart Park was shared by Chen Kai, right? How you can complement you, right, as an investor to recap first before I move on to the main topic, is that first, Smart Park gives you flexibility. Okay, so other than the fact that it's only for promotion of 5.8%, even without the promotion, currently it's around 3+%, which if you compare to the bank deposit of 0.05%, if you're aware, for most of the local banks of 0.05% is a very big difference. All right. And next thing is that for Smart Park, right, there is no lock-in period. Right. So let's say you put any funds into the account, which is through our trading account in POEMS, through either the trading or your advisory account with your FA that you have. All right, you can use it for investment into stocks, unit trust, or ETF anytime. All right, or you can even withdraw out to use as cash outside. All right, so this main thing is that means that you are actually able to withdraw these funds you set aside, similar to a saving account. Right, but saving account is go to ATM, immediately you withdraw. Right, so the difference is this. So our difference is that you put into here, you might have a slight delay of 1 working day, or within the day itself, the evening may receive. But other than that, if you compare the returns and availability to invest for other purpose, then you will find that this is a lot more flexible, especially if you have a cash plus account. Right? Because cash plus account is a pre-funded account, right? So to even have the opportunity to invest, you need to fund the account first. So while you funded the account, you also want that funded source of cash to be earning you return, not just sitting there as cash without any interest. So if you are not opted into Smart Park, you are not opted into money market fund for Phillip, you will sit as cash, and you only receive interest of 0.1% if you have more than 50K cash in the account, in the trading account. But if you opt in to the money market fund, as long as it's above $100 Sing, you already be auto sweep into this money market fund or Smart Park. So $100 will do. Our promotion is at 1K because it's easier calculation. So 1K will initiate the promotional period for you. Right. So with or without the promotion, you will still benefit from the MMF rate currently of 3+%. Okay, so the higher returns is this. So the higher return is on total aspect. Now the promotion is on Sing dollar. But actually, money market fund Smart Park is for both Sing and US. And the US rate is around 4.5 to 6+%. So if you have USD balances in your bank or in some other houses or some other cash you might have, right? You can actually deposit through the bank and fund into our bonds account, or even convert your Sing dollars into USD if you wish to have USD holding on your hand, right? Because our side for Phillip, you can actually withdraw USD into your USD bank in Singapore for no cost. There's no charges in withdrawing USD to park into your own USD bank account. But your USD bank account does not give you much interest. Our side here, money market fund give around 4.5 to 6% returns also currently. Right. So if currently the return is at this stage, you can already put in, right? So you also increase the efficiency of your portfolio while waiting for the next investment opportunity. All right. So next thing is a short-term investment. So let's say you have a short time frame emergency use, or you want to go for renovation, you want to go for traveling, you have already set aside funds for yourself for a purpose. But you already set aside funds. A lot of people set aside funds into a cash pile at home, either already in the currency that they need, or they park in the bank in a separate account so that they do not accidentally use the money. Because out of sight, you will not use it. Right? So you might actually now put into a trading account or put into an advisory account that you might have, if you know any FA, they can set aside for the same purpose and earn you a higher return. Okay. And if you actually look at this, right, for money market fund, it's actually considered as a cash equivalent because it's able to be used anytime and withdrawable. Right. So there's no lock-in period for you. Okay, so just to understand some terms that I'll be using later. Okay, so when you're looking at money market instruments, you're looking at cash equivalents. All right, also looking at current investment and long-term investment. This terminology actually used mostly for corporates, right, when they declare their funds. For individuals, I believe it's also relevant to us. Okay, because when you set aside your funds that you have, there's idle cash, we call it idle cash. You have cash equivalent, which is your cash on hand, ATM, current checking account, or even the money market fund. Okay, but current investment, 3 months, sorry.
Let's say I have a cash plus account. How do I move? Do I have to do something to move it to the smart card or is it automatic?
Okay, so let me clarify for you. There is no added step for you. If you opt into smart card, which is the money market fund, any excess cash that you have in your trading account above 100 Sing will automatically qualify into smart card.
So I have to opt in smart card.
Opt in, yeah, but you need to check. If your account is already opted in, no other step. If it's not opted in, just one step, opt in, password confirmation, you are done. So it's not a very complex situation, not to worry. Okay, so let me continue. The current investment is what? Something like a T-bill, fixed deposits, they might put. Right? So some customers or investors, they prefer to layer their fixed deposits. I came from the bank last time. So some customers come in every month to layer their fixed deposit in. Every month, one time. Every year they have something maturing. So that's one way to do it also. But instead of only that, you're looking at a lock-in for a fixed return. All right. So if your fixed return is lower than the short-term return of, let's say, a cash equivalent, then you will choose short-term cash equivalent. And the reason why the longer term, the 1 year one, is starting to have a lower rate than the short-term one is purely because of interest rate environment. Right now, you know that the interest rate curve is still inverted. So you will continue to be this stage there. The short-term returns seems to be higher than long-term return for cash equivalents, for cash money market instruments. They're not comparing to investments, right? Within the cash management instruments, you realize that why the shorter term T-bills are better return than longer term T-bills, right? Because of the interest rate environment currently. So if you have a money market instrument more than 1 year, you find that actually not much demand compared to the shorter term one currently for retail level. Of course, corporate levels, they know their projected time frame in the money. They will still put in the longer term investment like 2 years, 5 years, 10 years T-bills. Okay, so cash item itself. So for cash equivalent, there's these cash items. You have cash on hand, which is just basically cash notes, right? Cash in the bank, and that can use through debit card, credit card, or through any other form of internet banking. And then you have cash funds, you save it out. So sometimes some customers tell me, hey, I put in the bank, I put in my saving account. I can see the balance every day, and I'm tempted to use it to go shopping. Shopping for anything you want, shopping for investment, shopping for computer, for item, for anything that you are interested in, you'll be tempted to spend the money. But when you set aside into a trading account, into an investment purpose, you will then have that effect that you segregate your funds, that you know you have set aside, right? That you will not easily use it. Of course, you might still tend to use it, but you will not as easily use the funds itself. Okay, so for cash management strategies, so these are the ones I want to go through, right? So some of these you might be familiar, some of them you might not be familiar, right? Some of them might be more for a terminology that you use in the overseas, in the US market. So treasury bills, I think most of you all should be aware now because of the news that's ongoing. If you're not aware, you can take a look. Well, Singapore do also have treasury bills available, right? Okay. So treasury bill usually for Singapore is between the 6 months, 1 year, 2 years, 5 years, and 10 years. But it's not bills anymore. For above 1 year, they don't call it bills. Bills is for the 6 month and 1 year ones, right? Commercial papers basically like corporate bonds. Bonds that are wholesale bonds that is above 250,000 for one bond. So let's say OCBC or DBS or UOB or other companies like Genting Singapore want to issue to get money from the market. Instead of issuing shares, they can also issue fixed income, which is the borrowing from the debtors, right? So they issue commercial papers or corporate bonds to raise funds. So that is a form of debt obligation for those companies. So you have the marketable securities. Pardon the spelling mistake, but marketable securities mainly is also things that is also for the money, the cash management securities one. So it's also like T-bills, but it's tradable through the market. So most of the Singapore one actually, most of the Singapore T-bills can be traded in SGX. Just that it might not be so easily find the code that you want to trade on. And normally, because of the commission involved, you might not want to trade it also, because the yield is quite low compared to the open market where you just apply a new T-bill itself. So these are the short-term government bonds. So things like your Singapore savings bond, if you know, right? It's already a broken down version of a full Singapore SGS. And some people use it as short-term bond because you can redeem it for no cost. Meaning you redeem and you don't have any penalty for the Singapore savings bond. Okay, but all those have a form of maturity, which means a form of lock-in. You might be able to sell, all right? You might be able to liquidate the T-bill, liquidate the marketable securities, you can liquidate Singapore savings bond. But all these have either a form of a lock-in period or a form of time frame, or even worse, a cost to you when liquidating, which is the commission involved in liquidation. But if you compare that to money market fund or fixed deposit, these two usually are the most commonly used that have no cost. Fixed D, what's the penalty? Your penalty is you forego the returns you have earned in the period. So let's say you put a 12-month fixed D, at the 11th month, you go to the bank and say, I want to withdraw 1 month early. They will let you withdraw, no cost, but no interest. Okay, I think some of you might have experienced it before. No interest. Even if 11 months and 29 days, also no interest. If you die there, want to receive that 1 day before the maturity, there's no interest. Okay, but for money market fund is a fund that already accumulate the value within the fund value. Meaning every day, as long as there's an increase in value of the money market fund, the base NAV value, you will see the value increase already. You put 10K in, after 1 month, your value will increase by 1 month relevant in the prorated value. Right? So at 11th month, you need to withdraw out, you can already see the returns to you. The only difference between these two is that the certificate of deposit have a locked-in return for you, guaranteed by the issuer, by the bank usually. But money market fund cannot guarantee you any return at the get-go. But once you get the return, along the way, it's sort of locked in for you because you don't see much money market funds for the real stable ones have any downtrend. It's either uptrend, slow or fast. That's all. Okay, so the features of money market instruments for you as a way to handle your cash or either funds is your consideration for, first thing, liquidity. How fast do you really need the money? Do you want to lock in for purpose of locking in? So if your liquidity is important to you, you want to be able to withdraw anytime, then choose the option that I mentioned just now that's easy to liquidate. Right? They have no cost in liquidating. But I know some investors they want to lock in. They want to feel the sense that they have locked in funds aside that they will not touch easily. So it depends on your purpose. Also, same thing, short-term investment. So meaning, let's say if you're going to go traveling to Japan, end of the year, December, now is August, you will not be looking to do some high-end or high-risk investment into stocks. Then you might suddenly lose half the value or 1/4 value in 1-2 months time. You never know if you go up or down. So for short-term investment purpose, for short-term, you will want to look at options that can give you the return for 2-3 months. And 2-3 months, you cannot get a decent fixed deposit anyway. Right. So if you only left with that time frame, you know that I only have a few options. Either I buy off the market a short-term maturity kind of a T-bill, or I put into money market fund. Right. That's a usual option you have. Or you put into a high interest account. Some banks give you high interest account for certain tiers of qualifying criteria. But some people find it too troublesome to qualify for those criteria, which can get quite complex over time. But if you have, then it's good to get to utilize the high interest account from the bank. For those are guaranteed rate as well. But usually the things for most investors that they might face is that all forms of high interest account have a cap. And even for money market fund, our smart part, our promotion have a cap, 50K. But if let's say you have 200K, you want to set aside funds for something with higher return, 50K is just a 1/4. But you need to ensure the remaining funds is also earning you return. The remaining funds can earn 3.3 here, or 3+% here, 3 to 3.5 maybe even. But if you put it in the fixed deposit, you earn 2%, 2.5%. Or you put it into the bank deposit without doing anything, 0.05%. So it's about how you manage your funds you have access in totality, not just going for promotion and then you waste your majority of the funds that's still set aside. That's not earning you anything. Okay. So like I mentioned, so you want to have a more efficient use of your capital and quick access to capital. So quick access means what? So what do you define as quick? Some people want immediate, then you're left with the bank options. Well, only the bank can offer you immediate through fast transfer, right? If you do through any financial institution, normally fastest you get is 1 day. And as long as can be as far as 7 days for most FI, depending on what funds you put in and what currency you put in. Okay. So this tool is a pros, but you also need to know the cons. So is that low risk still and tail risk. So depending on what you invest in, something like T-bill, like I said, that need to have a liquidation cost, you might still be losing end if you liquidate immediately. What's T-bill when it's liquidated in market is still at market rate. So if there's a very big fluctuation in interest rate environment, investors can lose money through T-bill liquidation. Right? When you liquidate T-bills in the market, there is no guaranteed rate of return. There's no guaranteed principal comeback. Okay? You don't sell and get back principal. No guarantee. Even the banks that can buy back the thing, they buy at market rate. If the market rate causes the interest rate environment that this T-bill is negative in value to par, let's say it's 1K, you're only worth 999 now, you lose that $1 plus commission cost or the fees involved. So some money market instruments also have risk involved in liquidation. Usually, very few of them have risk involved in maturity. The maturity risk you get is default risk. The default risk mainly is like if you put it at a fixed deposit, it's default risk of the issuer. So if you issued by DBS, I don't think any of you have any concerns, right? But if you issued by a third-party bank or a different FI that you might not be very familiar with, that might be where you have some form of risk for getting the higher return of fixed deposit from that FI. Okay. So this is the thing, and a lower return compared to longer-term investment options is definitely there. So I'm not saying that all your funds should put into the cash management instruments, right? Especially if you have long-term goals and your total fund size is large, you need to set aside funds appropriately for long and short term. It's not all the funds go short. Go to the smart part or go to the money market fund, right? So for portfolio allocation, how do you allocate? Right. So this is just one example. Along the way, each slide you will see the allocation change. This is for illustration purpose. I don't make it so empty. Okay, but for portfolio allocation factors, the first one that you want to see and you hear a lot is your own risk factor. Okay, your own risk profile, right? You do your own profiling, you find your own risk, your high risk, your middle risk, your conservative, and moderate. Okay, but the key thing is this, everyone knows their own risk profile now. But a lot of people don't review it. What I mean, you don't review your risk profile over time. For age is one thing. Another reason for age is that if you are having a change in lifestyle, what do I mean? Singaporeans now, a lot of us, we are single. Okay, to a very older age and get married. If you are single for a longer time, means that you are having a lot of freedom for a longer period of time while you are earning the money. So it means that you are of a higher risk factor more commonly than the past. But once you get into a family planning, once you get into buying a commitment like a house for yourself, even if you're not married, buy a house, your risk level should adjust. All right, but many investors don't really adjust for that. When they buy a house, they still go into high risk product. Then they find that they might have short-term funds of cash because their money stuck in the house and investment. Then when I go traveling, they find I'm very stressed. I cannot go traveling. I got no cash. Right? Because my money all stuck in investment already. Cannot go traveling anymore. Cannot go buy my desired products anymore. So always have an allocation based on a reviewing basis, and it's good to review every year. Right? Why? Because investment goals also change, right? You meet one goal for short term, you need to check whether there's another next short-term goal. Right? So investment goal is a yearly affair that you set for yourself. So after you have that understanding of your own risk profile, then you select. Okay, so today I'll focus more of the more money market or relevant lower risk idea. But within all the selection of asset classes, you have low and high risk zone. Right. So not say that hey, I buy into bond means I'm safe. I buy into shares means I'm high risk. Not true, right? If you buy into DBS versus you buy a high yield bond from some random company, give high returns, but the company is like not sure if you will go bankrupt. Then you'll find that the high yield bonds are of a higher risk than the blue chip. Okay, so within the asset class, you need to also select the correct risk or correct assets within the asset class for your own risk profile. Okay, so other than that, you can also look at the small cap versus large cap and blue chip versus the speculative type counters. Okay, so other aspects of it is that you have to do regular investing, right? Okay, and you set aside funds for automated investment and makes you monitor and rebalance. So this is the whole idea of a portfolio for yourself. But do note, investing regularly, right? So those that are here, like at least the online can see the response. Now, how those are here? Who here invests every week? Every week? No one, every week, okay, invest. I'm saying those that you set aside every week. The money is set aside every week to invest. Who here invest here every month? I have funds, I get my salary, I invest every month. Anyone? Or maybe you do investment every 3 months to 6 months, 1 year. What's the time frame again? 3 months, 6 months, right? Roughly. Most of you, why do you do 3 months, 6 months? Well, you want to accumulate sufficient capital, enough bullets on hand, then you fire. Right? That's a common idea. But the issue is this: see, you accumulate enough bullets, right? Where do you accumulate the bullets? Accumulate where? Saving account. MF, okay, MF, that is already there already. But you accumulate in a saving account. What's why you get salary, right? You get a salary, you leave it there until you see something, a 5K salary in my savings, set aside for investment, 5K already. I withdraw 5K out, I invest. But the 5K, right, along the way is 6 months, 3 months. To accumulate the 5K, it's earning you 0.05%. Okay, so let me give a very extreme example. If let's say you every half a year invest, half a year, so half a year invest 0 to 6 months is 0 investment return, just saving up. 6 months you invest it and it earns you 4% return. Your full year return is what? Less than 3%, 2 plus a bit. If you weighted average, 2+%. But if you from the start every month you already put into MMF like this, I know, and this gentleman over here, you might be pushing it up to 3+%. Even if your MMF return is 2%. investment return is 4% at the end, your overall return is 3+%. You push up more than 1%. And in the current interest rate environment, you can push up by 2 percentage points. Okay, so putting it at a correct place will help you to have a more holistic portfolio management for yourself. So if you set aside for automated, if you are automated and if every month is a smaller scale, then it's fine because you are already investing every month. But not many people do every month. Some people do every 6 months, every year. That's where you can set aside funds in a more appropriate manner. Okay, for yourself. Okay, so what is a good gauge for yourself? What is a good gauge for money market fund? So for cash and cash equivalent, for me, my take, you're looking at around 2 to 10% of your investment portfolio. Yeah, let me repeat. This is not inclusive of what? Your emergency cash. Don't set aside emergency cash and then say it's part of my 2 to 5%, 2 to 10% of my cash equivalent. No, it's not. Okay, this 2 to 10% is just for investment portfolio. Your emergency funds is still there. Can be still put in money market fund, can still put in T-bill, whichever you prefer. But that is for emergency. This is for investment purpose. Why do you need this? Because first, you need to have stable investment opportunity, right? So if your upcoming payment and purchases is for emergency funds or other funds aside. And why I put these two right is that 2 to 10% might not be easily achievable by everybody, right? 10% is high, right, for investment portfolio. For some people that are starting off to invest, they might not have that much capital. But if you have a very stable income stream, then you know you're not going to retire, not going to change job anytime soon. Then you know that I can set up a bit less in the available cash for the investment. I can set up almost all into investment. But if you are going to change job or you're a freelancer or you are a person that is earning commission basis, you might find that you want to put a higher cash equivalent. So along the way, when you see investment opportunity, you will still have bullet on hand. You don't have to say, hey, I got no cash, I see an investment opportunity, I cannot buy. Okay? So too much cash will then give you the issue of whether you are looking for an investment opportunity or you are wasting the returns you get. But currently, in the current interest rate environment, we are very blessed because the too much cash situation right now, we are earning, even not putting in the money market fund, you put into fixed D, all that, you should be looking at least 2%. If any of you is getting less than 2% in your cash equivalent right now, you need to change. Because you should be getting at least 2% for any cash you have set aside for yourself for any purpose. Because of the current interest rate environment. But normally, we move back to before COVID, before the whole interest rate environment issue, you're looking at normally how much for fixed deposit? 1.5, 1.6, 1.7 for fixed deposit of 1 year. And that's the environment you're looking at for usual longer term basis. And it will be going back there as the US lower interest rate. By when? Usually 2025, 26 or so, you start seeing it going down. So right now, when you have opportunity to earn more from holding too much cash, this issue is less of an issue for yourself. It's like you can still afford to hold more cash waiting for investment opportunity. But as you see the interest rate curve go down, you should start investing that cash already. Don't be holding on to the cash for so long. But sometimes habits will grow onto you. You might start having too much, start being too comfortable with holding a lot of cash on hand. Okay, so this is for Singapore. So this is just a snapshot or a simplified manner to understand. So money market instrument for yourself, you have Singapore savings bond, you have T-bill and fixed deposit. For my personal take is that for you as an individual or anyone that is looking to do a holistic, the end stage, this is not about you getting to immediately achieving this, but the end stage is that if you can actually put some money every month to Singapore savings bond, okay, you do that for 6 months every year. Because the payout for Singapore savings bond is twice a year. Twice a year, every 6 months you give out. So if you buy 6 months, means that you actually have payout every month already. And why I say every year is because if you layer it properly, you can only get maximum exposure of 200K. Meaning 1 year, only 20K. Meaning 1 month, less than 2K. Okay, but of course, not it's an end stage thing. I'm not asking you to do it now. But if you are a retiree, planning for retirement, you have excess cash already on hand, and you see interest rate environment now is so good. SSB give you 3% for 10 years. And I said it's not much. Your fixed deposit will be for 1.7, 1.8% in a few years' time. Right? Not usually. So if we can guarantee you that 7 years later, you're still receiving 3% per half a year return. Why not, right? Why not set aside for it? T-bill is still there, but T-bill will be popular when the 6 months rate is higher than Singapore savings bond. Meaning a short-term rate is better than longer-term rate. You can still set aside money for short-term. Especially if you're, the younger you are, or the further away you are from retirement, then the more you'll be looking at T-bill over Singapore savings bond. And fixed deposit, one thing to note is that there is a cap of SDIC protection per firm. So for some people that have put a lot of money in one bank, if you're concerned about the bank, especially not Singapore bank, then you might want to be aware what is your own security cap of each bank. Okay, because local bank, I think always comfortable. But once you put into foreign bank for the higher interest rate environment for the promotion, you need to understand what risk you have for yourself. Because banks are not something that cannot fail. As you see in the even Swiss bank they fail. So you have also money market fund, which I mentioned. So this is our main promotion, of course. I'm just showing you the holistic manner. Other than money market fund, there's other opportunity. But of course, Chen Kai mentioned the umbrella. Okay, so for this money market fund promotion that we mentioned just now, we forgot to mention one thing is that if you have a trading account that have money market fund opted in already, or if you're not opting yet, opt in today, we are giving away one PhillipCapital umbrella if you top up 10K into the MMF right now. I mean, not right now, today. Okay. So this is just the overall slides thing for myself. So any other questions that there is from the floor first? Any questions? Manage that.
Question.
Yeah.
You say I option in your money market fund, and do I need to indicate how much? I mean, I have cash fast. Have some cash parking there.
Yeah.
No use to buy. So if I option in, do I need to indicate how much of the fund?
Okay, so the question is, do we need to indicate how much to set aside for money market fund if I opt in? Right, so the answer is no. So any amount above 100 will sweep the full amount in. Okay, so example, let's say I have a cash plus account. All right, today is Tuesday. I invested into DBS 10K. You will deduct money on Thursday because cash plus is 2 days later. I deposit money today, early. I very kanchong. I deposit first. Today I deposit in the money. If the money I deposit early enough, you will go sweep into money market fund today. And tomorrow, Thursday, then you will deduct to go into the stock purchase. The full 10K will already be earning the return for 2 days. All right, so it's ongoing. If you already have idle cash in the account, you will also earn the return already ongoing. Right, so as long as opt in, you will sweep in there. So there's no need to indicate the value. The full value will go in.
Yeah. Option in.
Yes.
Are you very risk? Say you can ask for the loss or whatever.
Okay, so of course the risk I cannot say zero. Okay, but the thing is that for money market fund, our funds is invested into fixed deposits, Singapore bonds, short dated, high quality bonds in Singapore for the Singapore SGB, the MMF. So usually the fund managers, they hold to maturity tag. It's just that for liquid cash, for any withdrawal, we have liquid cash pool for that. So I cannot say there is zero risk because by right, there is no zero risk item. But in this case, I can say I think there is no negative return before in the whole inception to date. Yeah.
How do you generate additional difference between your normal money market returns versus the 5.8.
Okay, the 5.8 is not generated. 5.8 is our company gift for new and existing clients. Meaning our money market fund will return, which will return 3%, 3.2%, 3.3%. Our company will top up whichever is required to hit 5.8% for you. It's a payout by our company. It's not generated from the market. Don't take your money out, go invest high risk product, come back. No. It's a gift as a national day promotion for new and existing. And I must emphasize that it's the first time I've seen existing clients involved in funding promotion. Usually only new clients. So now we also give existing clients for the month of National Day. Yeah, so it's actually really a very good promotion. And regardless of where you start in the month of August, it will last for 30 days. It's not that you until the 1st August stop. It's 30 days from the first day you fund the account in August. So as long as the funding happens in August, you are entitled to the promotion. Yeah. 50K. But I will recommend that you have a cap 50K, but if you really have excess cash in the bank earning 0.05, you really just sweep in more than you can. If you have 100K there, there's not doing anything, you won't see a return in the bank. So you put in here, you try out 1 month. After that, you see you like it, you leave it there. If you prefer the flexibility of the bank, you can withdraw. Then it's okay. But if you never try, you never know. Yeah.
Money market fund is part of Philips or it's like from outside.
Okay, so for the Philip Money Market Fund, MMM itself have a lot of companies doing. But for our promotion and Philip Money Market Fund itself is through PhillipCapital. Means our main company, not Philip Securities.
So it's a legally under Philips.
Yes. Yes. So it's under the PhillipCapital Management Fund.
One day I need to pull it out to invest in the stocks.
Right.
Then, is it free for me to?
Yes, it's free. So if let's say it's auto sweep in and you invest into a stock, it will just deduct as per like a cash basis when it's on deduction date. There is no lock-in period. There's no need to indicate to the company, hey, I need to withdraw this for this investment. As long as in your ledger, it will deduct automatically like cash. If you withdraw, you withdraw like cash. So you leave it as cash or leave it as money market fund, the speed of processing is exactly the same. There's no delay involved in the withdrawal or investment usage of it. Yeah.
So if you saw there like a parts 2.0,
for opting in, only website. Only website currently. Yeah. But if you do need any assistance, you can call the trading rep, we can guide you along the way. Because on a mobile browser, you can log in. But if you log in through the mobile browser, the Chrome, Safari, you can log in through the phone. This is not through the phone app itself.
Can I check the 5.8 is for the
Yes. After that, you go on to the normal money fund rate of 3+%.
How do you know how much percent is that?
Okay, so every week on Tuesday, roughly Tuesday, I think afternoon or so, we will update what was the previous 7-day return annualized basis on our homepage. So I believe the most current is 3.4. Today one was 3.31.
Show us how we
Yeah. Yeah.
No One moment.
Yeah, basically, the rate is ongoing. You will always change along the way, right? Every day. So our homepage, if you scroll down or you use the MF itself.
Yeah. So over here, I hope you can see for the online audience as well. So you can go to poems.com.sg. Go to poems.com.sg under product and services. Okay, click on access fund management. You can see the 7-day annualized rate being shown right here. Okay, it's updated every Monday.
Right? You can convert or deposit new SIM. The loss there. So if you convert, if you want to convert, because the current rate, I don't understand what you mean. Because Hong Kong dollar is not very good now to convert. You can still put in extra Sing dollars. But for Hong Kong dollars is waiting for investment for not converting, then it cannot be qualifying for the promotion or for the minimum fund. But it will be for Sing dollars and USD currently.
So for this promotion, it's not like
Sing dollar. So USD not in the promotion. But if you have USD, you will earn this rate. And I
Cap on 50,000.
it's not tech two, but it will be showing you the return you have performed at for the past 7 days every week. But it's for the past 7 days, it's not for the forward 7 days. Yes, every week you update. So from what I understand, it has been above 2.8 for a few months already, a few weeks, near months. Yeah.
Okay,
Yeah.
does the USD money market fund works the same like SGD?
Yes, exactly the same. The only difference is if you withdraw, give me 1 more day for the withdrawal timing. Once withdrawing in check for USD, take 2 days.
So, I mean, whatever funds you park into the money
Yes.
market funds will be liquid, right?
Auto sweep, liquid, investment usage, no issues, withdrawal, no issues. Same. The features are all the same.
5.38 is per annum.
Per annum basis for the past 7 days, annualized basis. But it has been maintaining above 4 all the way. Above 4 all the way. Highest it has touched was 6% for all the week. 6% for one of the weeks. So if you are liquid for
So the interest rate for USD is compounded daily.
yes.
Compounded
Okay,
daily.
let me explain. This money market fund is still a fund. Okay, so if you are interested to know how it works in the detail, some of you might be invested before in unit trust, right?
Yeah.
So money market fund in itself is still we call it incorporated as a unit trust in the form of MAS, right? Under the declaration. So there is a value per unit. So your excess cash that you park with us will convert this cash value into units based on the day that it's parked in. Okay? And the daily will go up by the rate that is performing at. Might not be exactly this, might be performing increasing on a daily basis. So every day you will see some increase if it's significant enough. Last time, before the high interest environment, you see the increase only maybe 2 or 3 days one time. What's the interest rate very low? 1%, 0.9%. You cannot see interest rate go up every day. But now the return almost can see daily. The increase of the money market fund NAV per unit. So let's say you put 50K in today, or maybe it's 100K in today, and it's going to money market fund. Maybe tomorrow you see 100K and $2 or $1. You know what I mean? So you will see a reflection of the return immediately. It's not I have wait for this.
Is it because promotion?
Smart Park has been always been around. Smart Park is a service. The instrument is money market fund. Smart Park is service. So want to make it sound good that you are parking money with us and it's smart.
But all the time I've been doing that. And once I put the cash money,
Yes.
automatically you pay me that.
Correct.
So why come out this new term like
Okay, why to some of you like existing clients you will be confused because you are already benefiting from it. But this smart part is to allow people that are not invested with us. Because their clients they are not investing. They just purely want to park the money only. So they have different accounts we have that can just purely park the money with us without any investment done. So for those customers, they prefer and they understand this term as the service they're looking for. Yeah, but the underlying investment instrument is the same as what you mentioned, is what you're familiar with, is correct. Yeah, so that's why well, maybe it's, if you're already enjoying it, we want to let more people enjoy. They don't know. They don't understand that they want to invest, they don't invest. They only want to park money. So you make this smart park very clear. You put here smart park means I park money only. Very clear. So for those investors, they will put with us. Yeah. Anything else? Yeah, sorry.
So for the banks, guarantee 75,000.
Correct.
So for yours,
No guarantee. But if you are aware of how the structure works for unit trust is that for unit trust, there is no misuse. Why? Because unit trust is a trust word. So there's always a trustee involved. So when we are the one managing the fund, we are not holding the fund. So we cannot suddenly take the money out and then run away. No. Because the money not even with us. The money is with the trustee that we put with. That's also regulated by MAS. So this structure is the way how Singapore keeps our investment safe. Okay, so this is just we need your trust within the whole system.
So for the returns of interest, is given up every week.
No, so like I mentioned, so it's a daily reflection of an increase in NAV value. So even before I update the rate, you can actually calculate your own return. Because you park on Wednesday, you know that you park in on X rate. It went up by 0.0001 or 2 in 2 days time for yourself. That's your return per unit. So you can calculate the return for yourself. But if you're not going to be so troublesome to calculate yourself, you can just come to our website, we calculate for you. Yeah. But this is a past 7 day rate. Past 7 days already performed rate.
I mean, see changing every day, but I think it's change once in a while.
Correct. If you don't have a large enough value, you might not see every day. If it's large enough, you should see almost every day. Yeah.
Okay, can you give us a point blank kind of numbers? Layman terms.
Yeah.
Assuming it's about 100K.
Yeah.
What's the interest that we'll get for the next 7 days?
Let's say I round down this 5%. 5%. 7 days, 365, 52 weeks. 5% or 5.2 is 5.2. 0.1% for 7 days. So 100K, $100. You know, $10 a day, $100. They have max your time. 100K should be $100. Okay, 7 days. Should be. And my max shouldn't be wrong. Yeah, $100.
So you will see that $100 reflected in the account.
It's not back in. The value already increased by itself. The 100K cash equivalent that you see in the cash balance.
So I see that in the this one transaction.
No, you don't, not transaction, it's the value itself. Your balance will be 100K, $100. Your balance will increase. It's not you see an injection of 100K, $100. No. The 100K on day 1 will become 100K, $100 at day 7 in your balance. It will update daily.
And that will be liquid.
Yes.
That will be liquid and use it to invest my stock.
Yes, any day. So let's say day 1 you put in the money, day 3 you withdraw out to invest in option into stock. Then day 5 you put back after you sell, no problem. But do note, if you deposit the money beyond the cut-off time, they will only sweep into money market fund the next day.
What's the cut-off time?
So cut-off time should be 2 PM. So let's say I do pay now, 10 minutes. I do pay now at 9 PM or 7 PM. The money in the account see already. They see it, but haven't swept in yet. It will sweep in the next day.
So I really should do it in the morning.
If you want to get it swept immediately before 2. Yes. But if you, for this purpose of the promotion, from what I understand, we go by the date. Yeah. So what you mean, the 5.8 will go by the date, from what I understand.
How do I check that there is a snap now?
Okay, how do you check? You log into
Sure.
so at your account details page, in the website version, you will see a table in the account details. The top right hand corner have a yes or no for MMF. MMF, yes or no. If you're not ready for the website right now, if you log into your app currently, your handphone app right now, you will see the transaction history. If you have any idle cash in $, if you see that there's an MMF valuation there, you are already opted in. On the handphone app, you can see that already. Yes, correct.
What's the new version of
Both can, okay.
So sorry, 5 or something for the USD, does it go for the existing funds?
No. So 5.8 is only for Sing dollars.
No,
5.3 you mean?
there's 2 interest rate, right?
The USD is the USD figure. The one 5.3.
It's on the, does it applies for the existing funds that you have in the account?
Yes.
It applies-
As long as you already opted in to MMF, Sing dollar and USD, there's no new opt-in on whichever one. So the existing rate applies for any idle balance you have for Sing dollar and US dollar. The promotion is purely for Sing dollar of 5.8. This is only the on top additional promotion. But your any balance lesser or more will still benefit from the base MMF rate. No issues. So this rate remain at this rate. So any balance you have, as long as you opted in, will already benefit from this rate.
What's the underlying instruments for investment instruments from USD?
Similar idea. So US treasuries,
Singapore market.
they will buy US treasuries. The fund manager will do it. Yeah. There's also USD fixed deposits.
One market funds is exactly like unit trust, and this is like a dividends.
Return, not dividend.
Okay, fine enough. I say,
Yeah.
unit trust, I mean, they will give
Correct,
dividends,
correct.
right? But
Similar idea.
similar idea, right?
Similar idea. So it's based on NAV valuation. If you want to go to that level, it's based on NAV.
So 1 week, based on that rate.
And this rate currently is that going rate. But this rate cannot maintain that long. Must be honest with you. Cannot maintain that long. This rate, how to maintain so long? Maybe give you another 2-3 months, you will see drop to below 5 already. And then you see drop to below 5, below 4. No, the drop will be on the underlying. The underlying, you will see your treasury bill in US dropping. I cannot give you the same rate anymore. US rate, the US rate, yeah. You see, that's why you see, if you go see the CNBC, you go to Bloomberg, you see the USD treasury rates, you roughly expect the same curve that you will be looking at.
Sorry, like you were saying, how to check again,
Okay, so you go to the handphone app, you can go to the transaction history.
transaction history.
Yes. So you go to transaction history at the Sing dollar segment. If you see any money market fund value there, then you are already opted in. If you do not see, don't worry. Our colleagues outside have a form to opt in for you. If you want to opt in immediately on the spot, for those online to opt in, just need to go to the login on the website under account management, under stocks, under online form. There's an access fund management button there to log.
Yeah, I think just to share, if you all want to check whether you all have opted in for the money market fund, we have our colleagues outside that can assist you. So you can look for myself or the lady down there, we can tell. Alright, so we can check for you on the spot whether you have opted in for internet. And to answer your question, whether it's our discretion or you, whatever management fee you have is already written in our report sheet. Whatever returns we give is net of our whatever our management fee is. So we cannot add our discretion over the year. So it is based on the fixed management fee. And you can refer to the info sheet, click on the US.
But the thing is, note is this, so you'll find 8.5 seems high for MMF, but we have almost no login for you.
Yeah.
So if you compare to other money funds, usually they at least have 2 to 3 days login for redemption. So in terms of the flexibility purpose, and you're already leaving it there for purpose of investment soon. So it's just earning you the return while you're waiting for the investment opportunity. That's the main thing. So whether you want that flexibility is a key issue. If you already know it, log in into a short-term fund, short-term bond fund for USD currently give you a 6% for same stable one. So you should lose out. But if you want that flexibility, 5.3 for anytime withdraw, anytime invest, that's the key pros that we have compared to those short-term bond funds. So money market fund versus bond fund, that's why there's this disparity. What's bond fund usually 5 working days for redemption.
So your promotion is capped at 50K fresh funds.
Correct.
So I've got existing balance. So I pull it out, and before the returns I put it back in. I get.
Technically,
yes. Okay, thank you.
Yeah, but of course, one of the TNCs also state I mean, try not to, for TNCs, right? If you refer to the landing page itself, we did specify, funds that is withdrawn from the POEMS account and deposited back, will not be eligible. But we only consider fresh funds. Fresh funds meaning money transfer from bank account to POEMS account. Yeah, so hope that clarified.
so don't know, so don't transfer from the futures account to Phillip. Transfer from the bank. Then you internal transfer, ask me why don't have. I transfer from futures to from Nova to Phillip to Phillip. Yeah, what must be from bank to us? They count that way.
So the 5.8 is net.
Net. So inclusive of the any return the fund already give, will top up to make it exactly 5.8% for you. So any shortfall, there's a top up.
And the 30 days starts with the day the fresh funds are in.
The first 1K fresh fund cited, we will start the 30 days. So let's say you fund only 500 today, then won't start. But if you fund 2K today, you'll start today. Even if you fund 10K tomorrow, you'll start from the 2K day onwards for 30 days.
Okay.
Yeah.
So,
But as long as the starting date is in August, you will start 30 days.
okay, so the whatever additional that you put in, assuming they haven't reached the 50K, then you just have a shorter runway to.
Correct.
Okay.
Prorated. No, it's prorated. And let's say in between you do really need to use the money, you withdraw, also no issues. Prorated.
But the 5.8 is for 1 month.
For the first 30 days. Correct. What is prorated? So meaning, let's say you really put 50K in, but I need to use 10K. I know I need 10K later on, no issues. Earn the 50K return first. If we don't 10K later on, what's your prorate meaning? Yeah. So there's no penalty for withdrawing midway. Okay. But you can withdraw and super back in. So let's say for any investment purpose, it might be happening that way. You withdraw to invest, you put back in from a sales proceeds, no issues. You still benefit prorated basis. I think you may answer from the online.
Okay, maybe.
Okay, so there's one that is similar to question from the floor just now. What is the fees and expense ratio in investing into the money market fund for 4 years? So the return that you will see is published here or reflected in your account is already net of fees, net of. They already deducted any fees involved. So to see the actual fees involved, you want to take a look, you can look at the fund fact sheet over here in the money market fund just now. But mentioned by my colleague for the USD one, I think 0.45%. Singapore also 0.45%. That's the management fees ratio for your investment this year, but you do not have to deduct further. So 5.8 you don't have to deduct anymore. It's already net off, already deducted off already. So whatever you see is whatever you get for the returns.
Is there any place that you go to see the historical performance?
Same. So you go to the unit trust fund fact sheet. They already first show you the fact sheet have. Prospectus also have. So everything is available. You can even see what's the top holdings there. But of course the prospectus don't update every week. So, but the fund fact sheet update quite often already. Okay, so where are the funds of the MMF invested into and how risky are they? So basically they are all invested into the low risk category. So I think I mentioned that's 5 minutes now. So invested meaning to what? Fixed deposits, T-bills of Singapore, or short-term, short maturity dated bonds is possible as well from the banks, if there is. So depend on what the fund managers see as the best opportunity for them to manage the MMF with. Right. But I think the top holdings right now, from what I last saw, are all T-bills. Yeah, but we give you the flexibility. That's the change that we make. Yeah, so any of you, if you're interested in the umbrella to fund the account today, please look for my colleagues behind the beautiful colleagues. Yeah, you can actually get, if you're already going to top up anyway, and you're going to top up today, you can get a free umbrella for help as well. All right, thank you everyone. Thanks everyone for the evening, for joining us. I hope it helps in some way or another. Yeah, thank you to the online audience as well.
Thank you.